Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. Quick update before we get into it. My ankle is doing a little better. I started walking on it a little bit yesterday, so it's a little sore today from walking on it yesterday, but I think we're maybe making some progress. Either that or I might be hurting myself some more. We'll find out in a couple of days. But again, thank you for everybody who's been wishing me well with my ankle as I go through this recovery. All right, in today's video, what I want to talk about is going to be really quick. I want to talk about the stock price, what happened today, what's going on in general with the market. I want to talk about Ford. I want to talk about GM and Tesla, and something that I emphasize a lot about the fact that everybody just seems to always misunderstand this. Obviously not you. You're watching this for a reason, but I'm sure when you go out and you talk to your friends or families or coworkers or whoever, you always hear people say the same thing over and over about Tesla. Oh, Tesla's so overvalued. Oh, Tesla's overvalued because of this or that. And they never really understand what they're saying themselves. They just hear the same rhetoric and they keep repeating it over and over. So in today's video, my goal is to just kind of shine some light on the fact that it's very obvious Tesla is not overvalued and the big difference between Tesla and the field. All right, so that's the main goal of today's video. But before we get into that, you need to do me a favor. Hit the like button, hit the subscribe button, ring that bell. And if you guys want to support the channel, you can find my Patreon link down below in the description, and you can find the link right here. All right, with that said, let's start off by taking a look at Tesla today and the stock market reaction. All right, so here we can see this is the chop today. Okay, this is how messy it was today. So initially we opened up, and I'll zoom in here. Hopefully you can see this, but essentially this is about $918 is about the peak that we hit today. So it started off as a very good rebound, all right? We needed this. This is a big kind of relief rally after what happened yesterday. For those of you who aren't aware, yesterday we sold off by 12%, and then we proceeded in the after hours. I mean, you can see it right here, right? Look at this. Even in the after hours, we just kept selling off. So this was very much needed. But then as the day went on, we just started to give up everything we gained today. And then we made it back a little bit. But again, you can see towards the end of the day, we start to sell off. Now, what's really happening here? Is this because Tesla has a fundamental issue? Is this because Elon Musk bought Twitter? I mean, there's a lot of different things that we can correlate to this, but the truth is it's a little bit of everything. But the main thing, especially for today, especially for this week, it has to do with the macro environment with tech. So the big problem right now with the market from a macro perspective, mainly the NASDAQ and even S&P 500, is that we have all of these tech companies due to report their earnings. And after what we saw happen with Netflix, everybody's very scared about any big potential miss. With all these tech companies set to report and reporting as we speak, the point is that this is what is going to keep the stock market up or really send it down. Now, a lot of investors, all of Wall Street is really worried about this. With inflation, Russia, Ukraine, what are the impacts? So we're going to touch on that a little bit more in a second here. But before we get into that, let's take a look at some of the earnings that we did happen to see today. We'll start off here with Facebook earnings. So here you can see Facebook shares spike on better than expected quarterly earnings. So let's take a look at what they actually reported. Let's look at these numbers. Let me zoom in here. This way we can actually see. All right, so we can see here earnings per share of $2.72 versus $2.56. So that's good. So they beat on EPS. But then revenues actually was a miss. $27.91 billion versus $28.2 billion. All right. If we look at daily active users, this was the big deal. Okay. The main thing here for Facebook was they had to, have again new daily active users, more monthly active users, and that they honestly did pretty good on this. All right. So daily active users, they beat. Monthly active users, that's a harder metric to beat on, but it's fine. Average revenue per user, we can see it here. So with that said, let's take a look at their chart. So here we can see Facebook kind of traded just pretty much, nothing really today, just kind of stayed around this range. But look at this. In aftermarkets, Facebook is soaring. It's up 17%. Let me make sure I get that. Yeah, 17%. It's up in aftermarkets. This, again, just shows you companies who, and Facebook didn't even beat that hard, but they did beat, especially compared to last quarter. Last quarter, Facebook took a beating. But what this shows is the resiliency and the fact that they could come back. This is the kind of thing that we need to see from Netflix, or not us, because I'm not invested in Netflix. I'm not invested in Facebook, or call it Meta. But the point is, this has a overall reaction when it comes to the greater market. All right, so I'm happy to see this, and this is going to be a good sign for tomorrow and for the week to come. So what we've had so far from the big tech companies, it started off with Microsoft, great earnings, but then Google didn't do quite so hot. All right, and then we had Netflix, which also didn't do so well. Actually, they did horrible. All right, they had a loss. All right, it was more than churn. They saw less users than they've ever had. Right, they actually lost users, subscribers. But then here we have Facebook that's essentially recovering after they had essentially a similar quarter to what Netflix just revealed. Here's Facebook rebounding. All right, so essentially everything is coming down to a point to Apple. All right, so Apple's going to be the next big one. All right, and we saw this happen last quarter, right? What was it, December or January? We saw Apple and Microsoft essentially save the NASDAQ, save the tech industry from just this continuing decline that we were seeing every single day. So one more big earnings I would say to go, really, it's Apple. After that, we're going to have the Fed meeting next week. And then from there, perhaps we can get back to some normalcy of reality, all right? We shouldn't have another Fed meeting for a little while. I mean, that should be kind of quiet for a bit, and we can just get back to the things that should matter, which is how is the company doing? Speaking on that, let's get to talking about Ford, and let's get to talking about GM. So yesterday we saw GM's earnings, all right? And GM did okay, right? But today Ford released. So let's take a look at Ford. So here we can see Ford. You can read the headline. Ford sees first quarter profit dragged lower by Rivian stake, but maintains 2022 earning guidance. All right, we'll talk about the Rivian thing in a second here. Ford Motor first quarter results were in line with Wall Street expectations, while its earnings were dragged down by a stake in electric vehicle maker Rivian and lower profits on reduced production. Here are the results. All right, so 38 cents versus 37 cents. Okay, so that's a beat. And revenue of $321 billion versus 31.13 billion. Okay, so that looks good, right? Ford results come a day after its crosstown rival General Motors easily beat Wall Street's earning expectations. GM also surprised the analysts by maintaining its adjusted pre-tax profit guidance of $13 billion, $15 billion. All right, so you see how all this sounds so nice and pretty for Ford and GM? I mean, you hear them say GM easily beat, right? So it's all this beautiful way of saying this. Well, let me show you the reality. And this is where we start to really compare Ford and GM versus a Tesla. So here we can see Sawyer Merritt reporting. Update, Ford just reported Q1 earnings. Tesla was more profitable than both Ford and GM in Q1 2022. Ford's adjusted results excluded a loss of $5.4 billion on the company's 12% stake in Rivian. So the whole Rivian stake, this you can call this a wash, all right? Because last quarter, Ford's results looked so good, but that's because they included all the gains that Rivian saw. But now that Rivian's gotten beaten up because, well, they don't really produce any real revenue, or they're not profitable, or they're not doing anything, so the valuation of being bigger than a Ford or GM just doesn't make sense at that point. But now that's come down to earth, and now Ford is going to see the other side of it. So they benefited last quarter. Well, they're going to pay the penalty this quarter. $5.4 billion on the company's 12% stake in Rivian. Its net loss, including the stake in Rivian, totaled $3.1 billion, the company said in CNBC. So that's including. So if you back out this or if you back out the $5.4 billion for a $3.1 billion loss, you can see that it's actually $2.3 billion that they made. So if we dig into the numbers, keep in mind this is a loss of $5.4 million. This $3.1 billion loss, right? So net loss of $3.1 billion. If you exclude that, that means that they actually made about $2.3 billion net, right? So keep in that mind, $2.3 billion. Now let's come down here. Let's start comparing. Q1 net income, Tesla $3.3 billion, GM $2.9 billion, and Ford $2.3 billion. So again, let's recap. Ford $2.3 billion net income, GM $2.9 billion net income, Tesla $3.3 billion net income. Now here's the big caveat. Not only is Tesla beating both of them, right? Beating both of them in net income, but look at what the deliveries were. GM had to sell essentially, call it 1.4 million vehicles to get that 2.9 billion. They had to sell 1.4 million vehicles to get less net income than Tesla did. What did Tesla sell? 310,000 vehicles. That's crazy. All right. This is almost 5x more than what Tesla sold. This is almost 1.5 million. Tesla only sold 310,000 for the quarter. So when people sit there and say, oh, Tesla is way overvalued, are you kidding me? What's going to happen whenever Tesla is making this amount per quarter? We're not too far away from that. All right. That's just around the bend. And keep in mind, Tesla isn't having to put all this money into redoing all their plants. They're not having to figure out how to make cost-effective vehicles. And this number is going to get lower for GM before it gets better. Same with Ford. Okay, well, what did Ford sell? Well, let's scroll down. Ford only sold 966,000 vehicles. So their numbers are trending down, if anything, right? So this is the point. This is the thing that people keep missing. Tesla is doing more with less. Tesla is a company that is extracting huge margins out of every vehicle they sell. And now I know a lot of people are going to complain or also make an argument saying, oh, well, inflation and the cars are so much more expensive, yada, yada, yada. Look, the average selling vehicle at this point is $42,000, $43,000 per vehicle. It's not like Ford and GM are selling used vehicles and making these numbers. It's not like Ford and GM aren't selling vehicles at the same price range. And it's not like Ford and GM can't also sell electric vehicles if they so choose to. Now, I don't think they can in a profitable way. I don't think they can because they don't have the supply chain. I don't think they can because they don't have the battery knowledge. They don't have the battery supply chain as well. I mean, you can go on and on. But on top of that, they don't actually want to depress their sales because they're going more electric. Right? This is the Osborne effect that you're starting to see. So you tell me, which company would you rather bet on? The one who had more net income than the other two and is selling essentially 5x or 3x less amount of product than the other ones and still beating them when it comes to net income? Or would you rather be invested in the companies that are having to sell so much more volume to get a lot less money? That's where we're at. This is the big difference. This is what I've been waiting for a long time. I've been waiting for something to be just this obvious and transparent. All right, GM essentially is down 20% year over year with vehicle sales. Tesla's up 67%, 70% year over year. So the next time one of your friends or family members or whoever tells you Tesla stock is overpriced, Tesla stock is too expensive, well, this is when you need to explain to them. What should it be worth if this company is doing more with less? If this company is already making more net income than both of these companies, and it's not going to be long before they're making more net income, both of them combined. It may even be this year. Don't think that's out of the cards because it's definitely in the cards. If Shanghai can get back online, Austin can ramp, and Berlin can ramp. Obviously, caveats, of course. Now, with that said, I want to talk about one other thing that came out while I was doing this recording. Take a look at this. If you all recall, I guess this was about a year ago now. No, a little less than a year ago. We had this whole case with where Elon Musk had to go to trial for the whole Solar City thing and the potential for nepotism there and all this, yada, 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 right? You guys know that story. But anyways, we got the verdict today. Breaking: Elon Musk defeats investors' claim over 2016 Solar City deal. Elon Musk did not breach his fiduciary duty to Tesla for pushing the company in 2016 to buy Solar City, where Musk was chairman and the largest shareholder. A Delaware judge ruled on Wednesday. So this is good. It's about time something breaks our way with news in this form. Obviously, the SEC stuff is for, and the whole Twitter babysitter thing for Elon isn't exactly going the way Elon wants or probably any of us want. It's just more headache, more noise. But at least this is something that can be considered checked off the list and resolved. Everything that's happening right now is just showing us that the stock price, Tesla stock price, is in this current of macroeconomics and then sprinkle in a little bit of Elon drama that always seems to be around the corner. A few months ago, it was Elon selling to pay his taxes. This time, it's Elon buying Twitter, right? There's always something going on. So it's something that we all always account for as investors in Elon or in Tesla. Now, in general, I don't think a lot of the movement we saw over the last couple of days really has much to do with that. Keep in mind, yesterday, the entire market sold off. I think yesterday was the worst day of the year or in the last year for NASDAQ and S&P and Dow. the point is, yesterday was ugly day for everybody. Did Tesla get hit a little harder? Yes, of course it did. But Tesla is also a very active stock, right? There's a lot of volume in it. It's constantly moving. And I don't think when we split, it's going to help that at all, right? I think that might increase the amount of variability within the stock price. But the point is, this isn't just to do with Twitter. This isn't something to do with Tesla. It's this current of macro news and environment that we're stuck in. So just grit it. It's going to be fine. We got to think about the long term because that's all that really matters. All right. All this is noise. I encourage you to follow because it's important for you to know where you're at and to do your due diligence, but don't let it be something that ruins your day. All right. If you can't stomach looking at it, I encourage you, do not open your brokerage account. Don't do anything on these bad, crazy days. The main message you should take away from this channel or any other channel you watch regarding investing or Tesla or anything is that we are here for the bigger picture. You're invested in Elon and Tesla for the vision, for the future. All right. And it's a future worth being excited about, as Elon says frequently. And so I'm excited about it. I'm sure you're excited about it. And I'm really excited about where the stock price is going to end up going. Hopefully this helped catch you guys up. And we're just going to keep comparing GM, Ford, and Tesla. We'll throw Volkswagen in there as well. And we're going to keep doing this until inevitably some of these companies go bankrupt, in my opinion. So with that said, I appreciate if you stuck to the end. Do me a favor, hit the like button, hit the subscribe button, ring that bell. If you guys want, you can find a link to my Patreon down below. Again, thank you. Love you all. Peace.